Hey everyone and welcome back. Today we're going to talk about the famous Terra LUNA crash. Our condolences if you had it in your portfolio. Right from what Terra LUNA really is, how did it crash and what do recent developments surrounding it mean for its future? Make sure you stay until the end if you want to know if we think it'll go back to the $100 mark. Before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications so you won't miss out on new updates in the world of investing. If you're someone who stays up to date with the latest crypto market activities, then the news of Terra LUNA crashing down a few days ago must have caught your attention. Sure, price declines and bear market periods aren't anything new to the crypto market. In fact, we have even seen Bitcoin drop below $30,000, which is less than half of its all-time high from November 2021. However, saying that Terra LUNA went through a price decrease might be a bit of an understatement, considering that it dropped from $120 per token to $0.02. The Black Swan event took place between May 11th and May 12th, and some traders are even calling it the Terra LUNA price massacre. So what factors led to this crash of this crypto? Is Terra LUNA a Ponzi scheme? In this video, we will discuss all of Terra LUNA 2022 in case you think that this is only a temporary drop. Terra LUNA and Terra UST are stablecoins that were launched in 2018 by Terraform Labs, a South Korean company run by Do Kwon. The main objective was to build an algorithmic stablecoin in which Terra LUNA would be burnt each time Terra UST loses its 1:1 peg to the dollar and vice versa. By doing this, more Terra UST would be minted and the dollar peg would be stabilized. For instance, if Luna hit a $0.98 mark, a small amount of UST would be burnt, and if it increases to $1.02, a bit of Luna would be burnt. While there are stablecoins with similar goals, Tether and USD Coin for example, none of them functioned in this manner. All of this sounds like a great system, which is one of the main reasons Terra LUNA was considered one of the best crypto investments for a long time. However, as it turns out, this system wasn't sustainable. Why did Terra LUNA crash? To put it simply, the main reason Luna crashed was that Terra lost its peg to the dollar. While there are lots of theories circling around this, it could be a consequence of the ongoing concern regarding the Federal Reserve's impending interest rate increase. Some of the most popular crypto exchanges like Binance have temporarily banned Luna withdrawals in the last few days to prevent governance attacks. Terra LUNA wasn't the only crypto affected. Hundreds of coins lost a quarter of their value on the same day, but Luna undoubtedly received the largest blow. With global inflation growing stronger each day, investors seem to be turning their backs on cryptos and searching for safer alternatives. As of this combined led to what traders are calling a crypto winter. However, crypto exchanges and some of the biggest experts in the industry have stated that this period won't last for very long and that these conditions aren't permanent. Is Terra LUNA a Ponzi scheme? The CEO of Terraform Labs, Do Kwon, hasn't really built a great reputation on Twitter over the last couple of years, with many professional traders referring to him as arrogant and pompous. This is why some circles believe that the downfall of Terra was caused by personal attacks. One of the theories that gained traction in the last few days was started by Charles Hoskinson, the founder of Cardano. Hoskinson put out a tweet that said a large institution had borrowed over 100,000 BTC from the crypto exchange Gemini. Then they traded that huge amount for Bitcoin for Terra UST for a big discount that Do Kwon provided. This directly decreased the liquidity of Terra. And next, he states that the institution then dropped these large amounts of tokens on the crypto market, which caused a liquidation avalanche and made investors sell their Luna holdings in panic. Charles explains that the crash happened because Terra was a Ponzi scheme from the beginning and that there weren't nearly enough Bitcoin reserves to prevent it. Gemini denied these allegations and Hoskinson later deleted the tweet, but that doesn't dismiss the fact that these kinds of market manipulations are fairly common, regardless of the financial market. Even if Gemini is telling the truth, Hoskinson tweeted that he is convinced that someone launched a personal attack on the Terra token. While it's still early to make any accurate assumptions, social media is full of different speculations on what happened. Also, the fact that Do Kwon was behind another failed stablecoin project called Basis Cash certainly doesn't help his case. What problems does Terra LUNA solve? Terra seeks to alleviate many issues currently faced by the world's top stablecoins. For one, the network wants to reduce centralization in the market. Unlike the competition, Terra's protocol functions across multiple blockchains. The network also seeks to remove the technical limitations on these assets through its open financial infrastructure. Terra LUNA brings a lot of benefits to the market. Its decentralized and permissionless nature make it ideal for the digital economy. the network offers competitive programmable payments, logistics, and an infrastructure designed to simplify dApp and stablecoin development. Terra is all about interoperability. The network is designed to run on multiple chains, connected by the Cosmos IBC. Currently, Terra is live on Ethereum and Solana. Developers have announced plans to expand their protocol to include other top-performing blockchains in the near future. Terra has a development-focused agenda. The network allows programmers to build smart contracts in Rust, Go, or assembly script. Additionally, you can add extra functionality to your dApp through the use of oracles networks. Oracles are off-chain sensors that have the ability to communicate data to and from the blockchain. Oracles are critical to many blockchain networks, especially when used for price discovery purposes. You can also stake Luna and earn rewards. In the Terra ecosystem, staking rewards are derived from a combination of gas, compute fees, taxes, and seigniorage rewards. Specifically, a small percentage transaction fee ranging from 0.1% to 1% on every Terra transaction bolsters these earnings for stakers. Terra utilizes a programmable infrastructure to provide the market with self-stabilizing stablecoins and other unique features. To accomplish this task, the network relies on an elastic monetary supply mechanism. The platform automatically adjusts the supply of its stablecoins to ensure that their values remained pegged to their underlying assets. Alright, all these benefits are great, but it actually begs the question, can Luna recover? The only way for Luna's value to recover to anywhere close to its former price would be to burn large amounts of supply to bring it back down to pre-crash levels. Terra has said that this is part of the recovery plan, but it may not even be possible. Terra Labs founder and CEO Do Kwon said, "What we should look to preserve now is the community and developers that make Terra's block space valuable. I'm sure our community will form consensus around the best path forward for itself and find a way to rise again." Michael Kammerman, CEO of online trading platform Skilling, told The Independent the UST and LUNA situation, along with the big recent BTC dips, are a clear example of how anything can go wrong in the volatile world of cryptocurrency. This by no means signifies the end of crypto, especially as we are seeing more and more brands and retailers accept bigger coins such as BTC and Solana, Sol, as payments. However, the crypto world can be unforgiving, as those who invested in Luna and UST are finding out. Therefore, it is absolutely essential for retail traders to ensure they do their due diligence when trading something as volatile as crypto. The verdict, and do we think Luna will go back onto $100? Terra Luna has been considered one of the best crypto investments for a long time due to its spectacular performance over the last 2 years. However, all of this changed when the Black Swan event took place last week. While most investors are selling their Terra assets increasingly fast, there are also those that see this as a great buy-the-dip opportunity and believe that Terra Luna will increase in value in the following period. Whether Terra Luna was a Ponzi scheme from the beginning or it has just had a stroke of bad luck, it's still too early to tell. Binance still displays risk warnings for buying Luna on its website, but if you're confident it's undervalued and could be at least moving up around 10x to recover around a $10 to $12 billion market cap, currently it's at $1.19 billion, it could be a good buy. Meme coin Shiba Inu still has a $6.7 billion market cap today with a 549 trillion circulating supply. Only invest in Luna what you can afford to lose, as Luna is highly volatile and will spike or drop depending on the announcements made by Do Kwon and the Terra team. It may be a better low-risk investment to buy Bitcoin for the long term as the current cheap price levels. And that was it from all of us today. Thank you so much for watching. For more crypto news, we'll see you next time.